So how do you deal with that market volatility? We mentioned with Ryan that the 60-40 portfolio is down, measured by the S&P 500 index and the bond index. It's down more than 10% this year, leaving it on pace for the worst performance since the financial crisis of 2008. Now, that's on pace. Who knows what it's going to do for the next 9 months. But I think the point here is so many advisors, so many quote-unquote plans are built simply in an allocation strategy of that 60-40 portfolio, and we're just going to withdraw a random amount out of that, not even really designating what we're going to sell to generate that. Well, what do you do when everything is going down like it is now, Troy?
Scott, can I, for people out there, we've all heard that 60-40 split, but some people probably wonder what that actually is. Yeah. So what that is of all your retirement money or all the money in your plan to produce you income, that is 60% of that going towards equities or stocks and 40% of that going towards bonds. But that's not the only thing that's out there. There's not just two asset classes, stocks and bonds. So, maybe let's touch on what else is there that people could invest in to produce some income.
Well, clearly, one of the things that is a star of a portfolio these days is real estate. Real estate has done great, and real estate is actually buoyed by inflation. Mm-hmm. And so a lot of real estate portfolios have done really well. And when you look at the bucketing strategy that we use here at GenWealth, we're going to have fixed income, we're going to have real estate, we're going to have equities, because those things tend to counterbalance each other. And in reality, when you think about what you're doing here, is one thing that hasn't been talked about is there's always a sleeve of cash. Yeah. There's always a sleeve of pure cash money that you don't have to liquidate anything.
Dry powder.
And I can tell you that since the first of the year, we haven't been liquidating equities in a classic retirement portfolio here at GenWealth. Now, we did liquidate some equities when they were up back in 2021, but that's what created that cash. And so it's opportunistic that we were able to harvest some of those gains, turn them to cash, and now we have that cash as a time buffer so we don't have to liquidate equities when they're down.
Yeah, I think that's a great point. I just had a review last week, in fact, with a pretty new client couple. He walked into retirement just as they became our clients last summer. Mm-hmm. Okay, so obviously we're already having a review with him, and we haven't even really had all of his accounts in play for a year. So that review has some negative numbers in front of it, right, from what's happened in the first 3 months of this year. But we had 12 months of cash to begin those distributions. So that was the point that I made to him, is we've got time for all this to recover because we haven't sold it. You have 12 months of monthly income in play that is not going to be fluctuating by the market. And that is how you deal with market volatility when you're in retirement. You have to have some safe or conservative investments. Maybe it is even cash for that short term. And then you have more moderately invested parts of your investment strategy in buckets in the middle years, and then more aggressive investment strategy on the back end. Want more content like this delivered to your inbox weekly? Visit fastest4.com to learn more.